All right, everybody. Today we're talking with Chris Clothier, a partner and VP of marketing at Memphis Invest, a well-known turnkey company. We're covering turnkey real estate investing. Now, turnkey real estate investing is an approach that many investors looking for cash flow with minimal active management themselves tend to use to build wealth. A lot of people try this strategy who don't want to be as active in dealing with day-to-day issues and day-to-day things as it pertains to their real estate investing. And Chris runs one of the more well-known companies out there, Memphis Invest. So Chris, I hope that introduction spoke appropriately of who you are, and maybe I butchered up on turnkey a little bit, but tell us what is this turnkey thing?
Well, number one, I appreciate the introduction. Two, turnkey really it is a buzzword for passive real estate. That's what it is. For those that want to invest passively in real estate, this is one option. And turnkey is kind of a buzzword. It's a catch-all. So it catches lots of different, we'll just say definitions, but just by definition, you nailed it. It is passive, it's hands-off. It's for those that don't want to put the time or don't have the time to put into learning real estate or actively doing it. They want something done for them.
Nice. Awesome.
Is there a trade-off associated with that? Are you going to get less returns here than maybe if you manage yourself and put in all that work?
Possibly, yes. Now it's one of those things. There's no definite. Is there? I guess if you're asking me, should you? I would say yes. Like turnkey done right is going to give you a lower return, but also it should be done worry-free, and it should be a lot less of your time and effort, but also that doesn't necessarily mean that it should be, a problem or a headache or anything that gives you more trouble. I mean, it really should be done for convenience, in my opinion.
So, sorry, I was going to say, like, what is, I guess, outline for us the difference between that convenience and somebody who's not getting it. So people who don't fully grasp this, like, what is done for you that wouldn't be done for you otherwise?
Yeah. So look, in the way that I view turnkey is that it should be for investors that are looking to maintain whatever, wealth that they've built, whatever they've been able to save up and put together to invest in real estate. It's not get rich quick. And it's also not something that should be done where you have a lot of input, or you have to put in a lot of time necessarily, but it should definitely be the trade-off is that a lot of people, they see the word turnkey and they think that everything is done, as in I don't have to pay attention to it. Someone's going to handle every little piece of the equation for me. And the reality, there's still things, no matter what, as an investor, you have to stay on top of. There's things you have to do. And if that's not being provided for you, if you're not being shown that, then you can hurt yourself buying turnkey. I guess that's a good way to put it.
What are those things really quickly? Sorry, Scott.
Oh, look, the most common mistakes that we see is that just because something is turnkey doesn't mean that the house comes already occupied, or the house comes fully renovated, or the house even comes with management. A lot of times today, turnkey is being advertised as a way for you to not have to do anything, but yet you still have to buy the house. You still have to pay for the renovation yourself. You still have to find a management company to manage it for you. All those things require time, effort, energy, and a lot of times an investor doesn't know that going in, so they think that everything's done for them. Then they find out on the back end, no, there's a lot of things that they have to stay on top of and do.
Got it.
So I, as a more active investor in my local market, I mitigate my risk and potentially increase my returns through self-education and effort into those investments. One of the appeals about this turnkey investment process, though, is I can go to another market, potentially one that offers more cash flow or a different type of return. But how do I go about, how is there a way for me to self-educate or become informed enough to make a quality decision with a turnkey provider in a similar manner to the self-education I put into my normal real estate investing?
Well, of course. And I don't think that you should ever buy turnkey real estate without meeting the person you're going to work with. And preferably meet them before you actually own the property. That doesn't mean that you have to go that route, but every time you decide not to, you just raise your risk. And for you, Scott, take the real estate out of it. You're an active investor. But that's what you do actively. So as long as you can provide the kind of returns you want with your money actively, you may never need passive investments. Mm-hmm. But at some point, if you wanted to build on top of what you're doing, so we'll call it incremental growth of your portfolio, then you might look at, okay, I want to put my money to work on top of what I'm already doing. So I'll look at another market. The biggest thing I try and tell investors all the time is that don't get stuck on the word turnkey, and don't get stuck on this idea that you have to go, to this company or this house. Research cities, research markets that are working, that you like, that you understand, that you get a familiarity with. Then find a company there that you can work with. And if you can't find a company, don't go there. That makes sense?
Yeah. So how would I go about kind of picking one of those cities? Let's start from the top. Like, what is that process for the investor?
Well, look, so again, take turnkey out of it, because I think that a city like Denver would be a great market for an investor that wanted to invest passively and was looking for a market that had strong growth in population, in rental income, in property values. An investor that can come in and buy a property from a company that does everything for them in Denver might see a lot of appeal in that market, because they know that the prices are going up. They know rent is appreciating. They know there's a lot of demand in that particular market. It may cost $300,000 to buy a single family home, but yet they see value in putting their money there in a market that's growing with a lot of demand. So that's what I look for. It doesn't have to be a small market. It doesn't have to be an inexpensive market. It just needs to be one that you feel, highly confident that it's going to be growing. There's a good, stable job market. There's some demand for what it is you're going to own.
I love it, and I have the same approach. I definitely feel like those prospects are really important to the long-term value of any real estate portfolio. Can you tell us a little bit about what cities you've chosen and that Memphis Invest operates in?
Well, yeah. I mean, obviously the name Memphis, that's where we started 14 years ago.
Wait. Do you guys invest in Memphis?
Well, every once in a while.
Wow.
To the tune of about 3,000 houses at this point. But
wow.
Yeah, Memphis is a great market that is stable and consistent. It's not, it is not growing by leaps and bounds. You don't have this influx of people coming into the market itself, but you've got stable jobs. You've got a albeit small, growing population within Memphis proper and the suburbs around it. So you've got a very stable, low price market. Next, we went to Dallas, which Dallas is one of the fastest growing metroplexes in the country. We're also in Houston, another one of the fastest growing metroplexes. We're also in Little Rock and Oklahoma City, two markets that we found were extremely stable. There was high demand for the houses that are there, especially Oklahoma City. And they're within our footprint. So that's why we went to those markets next. But look, it's if you'll take the word seriously, so many people get hung up on the word turnkey. If you'll take it out of it and think of it like this, if you're going to buy turnkey and you find a market that you really like, what you're looking for is someone who has purchased real estate, somebody local. They understand the market. They fully renovated that property so that there's zero headaches for you, no deferred maintenance. And then they have management in-house. So they're not passing you on to someone else.
Vertically
if those
integrated.
Three things exist. Do what, bud?
You're talking about vertically integrated, fully vertically integrated.
Yeah. And so it doesn't matter if it's called turnkey or if it's called, a done-for-you real estate agent that handles everything. As long as they have all these services together, where it's you don't buy the house and then pay for the renovation, or you don't have to go locate it somewhere and then do it later. It's everything I want is done right there in-house so that the day I buy it, I'm able to begin to realize, why I'm investing in real estate in the first place. That's what you need to look for. It's not necessarily the word turnkey, but that's what it is. Everything's done for you.
So how do we find those guys, and then how do we vet them? Because I know you and I have talked over the years about this. You've written numerous articles about it. I'd say let's start with the. Yeah, I mean,
let's hear some
start with whatever
stories.
you
want. What's a horror story? What's an example of something that can go wrong for an investor who's trying to invest in turnkey properties?
Well, let me tell you. Years ago, I had a guy call me, and I had some properties available that were on a website, and he wanted to buy them from me. And he called up and said straight up, I want to buy all 8 of your properties right now today. And I slowed him down and said, wait a second, hang on, who are you, number one? And then let's talk a little bit about what you're looking for, why you want to buy all these properties, why you want to invest far from home, because he was out of Chicago. And I spent about the next hour with him arguing with him because he was basically, I want to buy now. I like the market. The prices are cheap. It's less than what I can get here in Chicago. I want to buy everything you got. I wouldn't do it. And the guy told me that it was a huge mistake on my part. He ended up calling me 2 days later and said I was the dumbest salesperson he'd ever talked to because he bought 12 houses from another competitor of mine, which was perfectly fine. A year and a half later, he called me up and asked me if I'd buy all those properties from him because he was losing money and he needed out of them now. And it's not the other company. I don't blame. What I'm saying is that he never once visited Chicago or visited Memphis. He had no reason to invest here other than he heard it was cheap. He heard that, he couldn't believe the price of the houses. It was better than what he could get at home. He never spent any time understanding the market, understanding why he wanted to buy 12 houses at one time. He didn't even meet the company he was buying from. And had he done those steps, even with us, he may have said, I'm better in Chicago. I don't know what he would have said, but either way, he wouldn't have lost 12 houses. And that's what ended up happening. He sold them all for less than he paid for them.
So your advice is get to meet the folks running it. What about somebody who doesn't know a lot about real estate investing, but it's like, they've got money in the market or they don't, and they've got cash that they want to deploy, and they don't necessarily have the time or energy to go and hopefully they know enough to vet some of the numbers there, but how do you go forth if you don't have that ammunition, or do they have to get that ammunition?
You don't. Exactly. You cannot afford as an investor to buy real estate without knowing the basics and without even I get this. I'll tell you one other thing. I get this all the time because there's this notion out there that turnkey companies prey on California investors. But I'm going to tell you something right now, because West Coast and wealth and, looking for cheaper markets. The reality is this, that any investor, no matter where you live, you need to understand your own market first, because you may have opportunities that are just as good as buying a turnkey property 1,000 miles away, right there close to home. And if you don't know that, you have no business investing in turnkey. You have no business investing anywhere, whether it's turnkey or not, far from home. You just don't. You have to know why you're investing, who you're investing with, because that's really the biggest thing. If you don't know who you're investing with, you could be in trouble. Every time you skip one of these steps, you get to know the company, you get to know your own market, you figure out why you're investing in the first place, you raise your risk. That's the biggest problem today for a new investor getting started, is that there's so much risk that they don't know about, and by not spending the time, there's a higher likelihood it happens.
Yeah.
So this is a bummer for me, because I was thinking, turnkey investing, great. I go with a trusted name brand turnkey provider in a city that has some cash flow, and everything's gonna be fine and dandy, and I can just kind of put my money to work and forget about it and go on with my day. But you're saying no. Go look, learn the market, get to know it, get to go meet the people that are going to be running your investment. And this is a bit of work. This is something that you're gonna have to invest some time and self-education into before getting going right off the bat.
Well, don't convince yourself that if you don't start today, the opportunity is lost, because that's not true. And anybody that tells you that and tries to use that as a selling technique, you definitely don't want to do business with, because you have time. Patience is a lost art for investors today. And, everyone sees what's happening with the market. Prices are going up. We had this huge downturn, at the end of the last decade. And so everyone thinks that it's over. Like, if you don't buy now, your chance is over. And that's just not the case. And I will tell you this, because of what you just said there, Scott, even myself, I've worked really hard. My family worked really hard for the reputation that we have, but you can take nothing on faith. You cannot just say that because that guy has been in business for however long he's been in business, or somebody told me they're really good, or somebody else is having a really good experience. That cannot be enough at first. You can take nothing on faith. You have to do the research yourself. That way, if something goes wrong, at least you can look in the mirror and say, hey, I made decisions based on information. I was informed and I made a mistake, or whatever. That's just the way I look at it.
I love that. Hey, Chris, what kind of red flags? I love the idea of, a company that's vertically integrated. I think that makes a lot of sense. You don't want a company who doesn't fully renovate or doesn't, manage in-house and things like that. What other kind of red flags would you warn people to steer clear of?
Well, there's some buzzwords that I'm not a big fan of. One of them is the word rent ready. Rent ready is.
Yeah, what does that mean?
Well, rent ready is a term made up by landlords to justify spending less money. That's the way I've always explained it, that when someone says a property is rent ready, that means we've done the least amount of work possible to get somebody to lease it up. Now this is just my own philosophy about investing. There's a lot of people that don't go this route, but if you're an active investor, that's one thing. If you're a passive investor and you're buying a property that's just rent ready, just had the minimal amount of work done, you need to be prepared for cash calls. You need to be prepared for failing roofs, failing systems, failing electric, just things breaking constantly, because that's what's going to happen in that property. An active investor is prepared for that because they're self-managing usually. But a passive investor, especially buying far from home, you have to make sure that there's no deferred maintenance. And then two, one of the ways that it's a sales trick that's been used to convince investors that everything is on the up and up and all the work has been done is they use guarantees. They guarantee rents and they guarantee no maintenance. And usually guarantees are done for the first year. If an investor, I just encourage you to kind of ask yourself a question. If the work was done properly, I shouldn't have maintenance in that first year. If the management company is vetting properly, I shouldn't have vacancies in the first year. They may happen, but if a company is guaranteeing me that they won't and guaranteeing me something on the front end as a way to get me to draw in, then I should be wary. I should be wary of what it is they're selling me. I always tell investors a 12-month guarantee is great. Just ask for it in year 3. Just say, years 1 and 2, those should be.
That's normal, a given, right? Yeah.
So why don't you just guarantee me no rent loss and no maintenance in year 3, and then I'm good to go. That's a guarantee that has some power.
Would you do that? Do you guys
do
that? Do you guys do that? Would you do that?
Never. I don't do any. I offer no rent guarantees or no. There's a difference between a rent maintenance guarantee, meaning you won't have any, and doing standing behind your work.
Yeah.
Having what's it called? I'm having one of those 45-year-old moments.
I don't know. I'm having them too. I don't know. Scott, you're half our age.
Warranty.
Warranty.
Yeah. Whoopsies.
So,
way off.
But here's the other thing too. Any good company that wants to build a long-term and foster that long-term relationship, they're going to recognize that an investor having maintenance and vacancy issues those first couple of years, those can be a real bummer. Those can be something that can really dampen a relationship. So, most good companies are going to really watch that and say, the performance hasn't been as good as we would expect it to be. So we're going to step in and handle this. That's a far cry from telling somebody a guarantee on the front end to get them to come in and buy your property.
Makes sense.
Yeah. So I have 2 quick questions here.
Yeah.
One is, as a potential out-of-state investor, my big fear is, I go with this property management company and they're not around in a year or 2. Right. And now I got to go and figure out all these problems on my own, maybe with people I've never met, people that I didn't, that I don't trust. How do you mitigate that risk as an out-of-state investor?
Well, hopefully you're going to do business with a company that has existed since before the crash. And there's a number that are out there, especially if you're just picking a property management company. If you're going to buy passively and find a property and just pick a property management company, you want someone that's been around. There's a lot of arguments about should you go with big companies or small companies based on cost. I'm a big proponent of you want to deal with a company that has infrastructure and systems and people. There's some real meat behind the company itself. Even if they charge a little bit more or if they're charging a premium for it, I guess the best way to put it is you want a company that knows how to make money, because a company that knows how to make money is going to exist when you need them. A company that stays small, tries to keep all the money and tries to hold prices down, they're the ones that in a crisis are going to disappear. So you want, in my opinion, you want to look for somebody that's been around for a while. Certainly, I don't think you want to do business with companies that started in, 12, 13, 14. That just, they don't have a long enough track record. And you certainly don't want to in my opinion, deal with companies that want to entice you by saying we've got really low rates. Like we're going to undercut everyone else and keep our costs really low because the adage that you will get what you pay for exists. If they don't have, if costs are low, then they just don't have the revenue to build the infrastructure that out-of-state investors deserve.
Makes perfect sense. And my second question, which might be a little bit of a longer one, is what is the business model? How do these turnkey companies make money? I kind of get the idea that they buy a house, they fix it up, and then they sell it to an investor. But can you walk us through that and just how your company finds deals, sells them to investors, manages them, and then makes money?
And give it to us in like a minute or two.
I'm gonna keep it really short. The main way a turnkey company should make money is that they own a property. Okay, so this is a private transaction. They buy a piece of property, they renovate it, and then they sell that property to you. So you can see through public record what they paid for it. They should be able to show you a scope of work of this is what we spent to repair it, and then you can see what you're paying for it. Most are going to make money on the arbitrage, the difference between what I paid for it, what I renovated it for, and then what I sold it for. Beyond that, we're a traditional property management company, so we make money managing real estate, 4,500 properties now. But most turnkey companies, what you want to see is that they make money because they have put their own money into it. They bought it themselves, they renovated it themselves, and now they're selling you a finished product.
That's great. Awesome. Chris, this is great. Fantastic. Yeah. We're trying to keep these things short. So I love it. I think it was chock full of great information. If people want to reach out to you, ask you any questions, how do they do that? And, let's give you a minute or two to tell people a little bit about yourself and your company.
Well, look, you can find me right here on BiggerPockets. You can also find me at chris@memphisinvest.com. I try and answer emails all the time. I try and answer responses through BiggerPockets. I try and be very active there on the site. Josh, you and I know, I'm not sure how long it's been. It's been maybe
10 years, probably.
Yeah, 8-9 years.
Yeah.
And I love it. It's such an awesome community to be involved in. So that's that's probably the easiest place to get a hold of me. We've been around. My father started the company back in 2003, into 2003, early 2004. Kind of formalized it as Memphis Invest in 2007, and we have been blessed. That's the only way to really look at it. We've got I think we have a phenomenal team. We've got a really good service that we put out. Product is, I hate to say product, but it's a bit of both. It's a product and a service, and we've just been blessed through the years to be able to have a lot of success at it. We're managing, as I said, 4,500 properties today. We're going into 4 other cities. We plan on it, hopefully over the next 12 months. We may not. It's just going to depend on how they shake out. But, we're growing because there's demand. And, like I said, we're blessed to be a part of it. So if anybody wants to reach me or ask me questions, feel free, man. I love interacting there on BiggerPockets, so reach out to me through there.
And obviously check out the website, memphisinvest.com.
Of course. Yeah, absolutely. But remember the main thing I told you earlier. This is your chance, man.
Plug it. You got it. Come on.
Look, if it's you, of course we want people to come to the site, but get to know who we are. There's no rush. If we're the right fit for anyone that's watching this, we'll all know it. And if we're not, that's okay. We'll help you get pointed in the right direction. That's the best thing we can do for an investor. So
I love it. Chris, thank you so much for coming on, man. Really appreciate it.
Yes, guys. Thanks for having me. Yeah.
Hey, take care.
All right.